It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. New levies kicking in. President Trump's 10% global tariffs have taken effect in a push to protect his trade agenda. Bouncing back, futures rebounding after stocks sold off on a Citrini report, stoking more AI concerns. And President Trump gears up for his State of the Union address this evening. All right, let's take a look at those markets because Lunar New Year is done and Chinese markets are back. That may be helping things. Also, the idea that the picks and shovels are AI are all Chinese and Asian companies. So your TSMCs and your other companies that make the chips and make the equipment that makes the chips, they rebounded overnight. So again, it's the idea that companies that are disintermediated by AI suffered, and to that end we saw the S&P down 1% yesterday and the Nasdaq down 1.2%. But there is relief in store today, potentially, although this could just be off the back of the Asian session. We'll have to wait and see what happens with the US session. Treasuries-wise, we are seeing that continued slump in yields with the 10-year now at 403.47. Those tariffs came into place just about 5 hours ago. They weren't as bad as they could have been, though. 10% was what was posted on the website, not the 15% that President Trump had also been threatening. But we'll see how that also progresses. And then we're also seeing a little bit of movement in the yen. So Takaichi apparently is a bit more dovish on monetary policy, and that's also having an impact on currency trading today. We'll dive into all of these stories in the next hour. Let's get to some individual movers, though. Here's Abir Abu Omar. Abir.
Bonnie, hi. Let's start with the healthcare sector with Hims and Hers down 7% in the pre-market. Now, this is one of those stocks that has been mired in legal and regulatory drama since the beginning of the year on its copycat drugs, weight loss drugs that Novo had come up and sued them when it comes to those weight loss drugs. The stock is down on results from yesterday as well, and we know that it's now subject to a new lawsuit from the SEC, which has asked it to maintain or preserve some of those documents for future purposes. Moving on from the healthcare sector to a little bit on software. Now, SanDisk is one of those stocks that are doing incredibly well this year. The stock is up almost 190% for the year, Vonnie, and that is on the continuing story on demand for data storage. Now, SanDisk is one of those companies that are benefiting from AI disruption because it is on the hardware side. So 2.9% up this morning in the pre-trade, and then finally we move to this small software solutions company, Keysight, that is up quite substantially this morning, up around 17% in the pre-trade this morning, and that is on the back of some of the work that it's doing in the AI space, and also it's an earnings story from earlier. It is doing quite well on the back of those. Fonnie, back to you.
I had to have a look at SanDisk, Kabir, because of course we've been talking about these memory stocks, and year over year 1,271% of a gain for SanDisk. I had to double check that, but it is true. All right, that is Abir Abu Omar. She'll be back later this hour. Also coming up in this hour, Sharon Bell of Goldman Sachs joins us on the market rotation. But first, President Trump's new 10% global tariffs went into effect. It's the first step of the White House to help preserve the administration's trade agenda after the Supreme Court deemed the original ones, or some of them, illegal. Joining us now is Bloomberg's Brendan Murray. So it looks like Section 232 and Section 301 investigations are going to start up to try to replace some of these tariffs that were deemed illegal. Brendan, how does this work?
Yeah, so they've come out of the gate pretty fast here with these 232s. We're going to get the 301 cases. The 232s are around national security, and they typically target industries as opposed to countries. The 301s will go after unfair trading practices by certain countries. They can group countries together or go after them one by one. But what we're seeing is the administration, it's really a race between the Commerce Department and the U.S. Trade Representative to try to rebuild this tariff wall that the Supreme Court took away the president's power to erect around the U.S. economy.
Yeah, Yeah, I mean, could we be looking at a hodgepodge of numbers depending on the country, depending on the sector? As I understand it, there are some investigations that haven't reached a conclusion even yet.
Yeah, exactly. And the time frame of those could be many months. They could be a couple of months, or they could be 9 or 10 months. So it's going to be hard to tell the timing of this, which will make it difficult for companies to figure out their supply chains as they move quarter to quarter. It's going to be a tough, it's going to be uncertain, and it'll be difficult to manage inventories as we go through the year until we get some more clarity from the administration about what kinds of industries they're going after, what countries they're targeting, and what the tariff rates are going to be.
What about the countries themselves? Because we obviously know what the EU is doing. It's just sort of stopped work on all kinds of legislative affairs related to tariffs because it doesn't really know what to do, or that's what it says. Anyway, what about Australia, the UK? What are the responses? How are they fighting back if they need to?
Yeah, exactly. The 10% that took effect overnight rearranged the matrix of winners and losers in these various trade deals. And so the administration still hasn't come out officially with the 15%. That the 15% upset a lot of countries that were winners under a lower tariff level. And so what you might be seeing here is the administration trying to finesse the next executive order on the 15% to account for some of these trading partners like the European Union who say, hey, look, we had a deal. The deal was for nothing over 15%, but if you bring it up to 15%, that's going to take us over that cap that we negotiated. So we'll have to see how the White House plays this, but there could be some behind-the-scenes dealings going on right now to make sure that next executive order for the 15% doesn't upset the trade deals that the president has spent the past 10 months negotiating.
You have to imagine that the president isn't going to go to Congress, right? There is no congressional route here.
Well, we'll see what the president's message is at the State of the Union tonight before Congress. But his tariff policy is very much in the debate of public opinion right now. Republicans and Democrats are some Republicans are starting to say, hey, maybe this isn't such a good thing we should run on for these midterm elections. So we'll have to see what Congress does. But at the moment, Congress doesn't really feel like the Republicans who are in charge of Congress don't want to give refunds, and the Democrats don't want anything to do with the tariff message that's coming from the White House.
No, and the Supreme Court justices are going to be right in front of the president tonight, or those who attend at least the State of the Union address. Brendan Murray, extraordinarily busy these days. He's our trade czar, and thank you so much. Futures bouncing then after stocks closed down more than 1% in the last session. This after a report by Citrini Research outlining hypothetical AI-driven structural shifts which stoked fresh AI woes. Bloomberg spoke to the co-author of the report, Lotus CIO Alap Shah, on the market reaction.
It's not that surprising when you take a step back and consider kind of where the markets are in the U.S. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, spooks people when you do consider what is negative about this. But I think specifically the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, what was so interesting or special about this particular report, given that we're seeing, warnings about AI and disintermediation and, so forth practically every day now?
Yeah, I think to some degree it's timing, and actually that kind of point that the guest kind of mentioned, that the capabilities of AI have accelerated so rapidly in the last 6 months. Almost every week now we see something about particularly Anthropic's Claude business and what that can potentially displace. And so I think the timing of this particular announcement and the fact that the markets are so sensitive to the risk trade on AI is kind of what's really brought it into kind of focus. And obviously, the report from Citrini, quite a well-respected outfit, and I think some trust there that it's a thoughtful piece of research and a thoughtful scenario.
Yeah, and there were numbers in there. There were projections with very definite numbers, like 10% unemployment, which, really make the headlines. I have to ask you about IBM, because you mentioned Anthropic, and you know, Anthropic said that Claude Code can do basically what COBOL can do, and you had IBM actually coming out and defending itself on a blog. I mean, does it need to? Is it in danger?
I don't think IBM is in danger, but I mean, this is what we were just talking about. I mean, COBOL has been around, I think, for something like 60 years. Huge number of institutions, particularly in the finance sector and government, still rely on it because it's so reliable and it's so well suited to kind of high volumes of data. And there's been a huge amount of resistance to transitioning away from COBOL because of the systemic risks that it potentially creates if you get that transition wrong. Now, IBM already has a number of AI-powered tools that help companies to kind of gradually reduce their reliance on COBOL and replace it with other more modern software languages like Java, but it's a gradual process, and so I don't think there's necessarily anything new about the Anthropic solution, but it's almost kind of creating a fresh magnifying glass or focus point on this issue, and again, just kind of speaks to this point that AI's capabilities are accelerating. There's all sorts of kind of established business models that could be at risk of quite significant disruption.
Yeah, I mean, IBM is big blue, and to have it come out and say, you know, we're not just a COBOL company, we also are a platform, you know, for other things. A mainframe platform was pretty stunning. Anthropic is going to let some of its current staff sell their shares. I guess there's plenty of demand, and it's not going to be Anthropic that will buy those shares, Matt. Who's buying them?
Yes, I think it's something like $5 to $6 billion being earmarked, and it's an opportunity for external investors to get involved in Anthropic, potentially ahead of an IPO event that could happen maybe later this year, depending on market conditions. And so, I think from an employee perspective, be interested to see how many people take the opportunity to cash out to some degree. But obviously, software engineers at companies like Anthropic are heavily compensated in stock options, and so I wouldn't be surprised if a lot of them want to take at least a bit of money off the table so they can actually buy a house, just kind of go on holiday. But I imagine a lot of them will want to keep a fair amount of their exposure to the stock ahead of an IPO, because I would imagine that there's more upside to come if and when that company goes public.
Buy a second house or go on another holiday.
Yeah, exactly.
Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. So, in macro moves, the yen weakening pretty substantially against the dollar. This following a Japanese local media report that Prime Minister Takaichi has voiced apprehension over more rate hikes in a meeting with the Bank of Japan governor. Bloomberg's Skylar Montgomery-Coning joins us now for more. This is a really fascinating development, and it was a big surprise to the markets. So it looks like Takaichi might not be too excited about further hikes. What happened? How did we get this wrong?
Yeah, I mean, it's interesting because I think the market reaction post-election has been a more conciliatory tone from Takaichi, and so the idea was that she wouldn't be interfering with the Bank of Japan. You get this kind of gradual hiking cycle continuing that's been going on for quite a while. But if actual fact, I'm not sure it's that surprising in terms of if I'm the leader of a country that's struggling with wanting more growth, with wanting inflation to come down, even though the Bank of Japan helps with that. From a consumer perspective, I probably want lower rates. So it's not particularly surprising from that perspective. I think it also, in the context of the yen, you need to think about there's more than 50 basis points of hikes priced this year. So you're on the more hawkish end of expectations. In terms of a terminal expectation, that's even higher. And then also you've had more other negative headlines overnight. So comments around Besant and the rate check we had earlier, as well as Chinese sanctions or restrictions on Japanese companies.
Yeah, China putting 20 of them on a watch list and also sanctioning 20 more is in response to Japan prodding China. But you mentioned the Besant thing. I want to bring this up because the yen had been weakening already before we knew about the Takaichi comments, on the fact that Nikkei was reporting that it was Scott Bessent that actually asked for the FX rate check, and it had nothing to do with Japanese authorities, and they didn't know about it, which is something that traders had speculated on anyway, right? Nikkei reported it, Japan has not denied it, so are we to take it for, truth that it was Besant that did this?
I think we probably have to. And this is a really interesting development because we saw earlier this year was the Japanese yen appreciated significantly on this headline that you had a rate check out of the U.S. Now, we know that Japan and authorities in particular don't want a very, very weak yen. And so there's always been this idea that you have some kind of ceiling on where dollar yen can come, particularly from the Japanese side. But what changed in the beginning of this year was the U.S. was getting involved, and that unilateral intervention doesn't really work on its own. You need something to change from the U.S. side to shift that. And so that's why in January you saw such a big amount of yen appreciation in response to that. Now, the idea is if Japan wasn't actually that bothered about the level, and in dollar yen we are around 160, if they weren't actually that bothered about the level, then maybe there's a higher ceiling on where dollar yen can go, and the market may test how far it can go. I think, though, maybe it's more telling that the U.S. side has concerns over how high the cross is, because they're the ones who can really make a difference. When you've had significant appreciation in the yen versus the dollar, it's because something's changed from the U.S. side. And so I think that's where I'd be focusing.
We are definitely going to be watching the yen very closely in the coming days, trading right now at 155.90. Skylar Montgomery Koning, thank you so much. Now, to other top stories trending on the terminal this morning. JPMorgan CEO Jamie Dimon says he's starting to see parallels to the time before the 2008 financial crisis. This is what he said about fierce competition in the financial industry and the rush to make loans at the banks. Company update session on Monday.
Unfortunately, we did see this in 05, in 06, in 07. Almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
The United Kingdom announced its largest sanctions package against Russia since the early months of the Ukraine invasion in 2022. The sanctions target energy revenue and suppliers of military equipment. Russia's state-owned crude pipeline operator Transneft was among those on the list. And Bitcoin extending its decline. It's on course now for its steepest monthly drop since the crypto industry saw a slew of corporate collapses in 2022. It's currently hovering around $63,000. Coming up, Standard Chartered dropping on weak fourth quarter earnings. We'll bring you our interview with CEO Bill Winters next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Standard Chartered slipping. The lender announced a fresh $1.5 billion share buyback as it reported weaker than estimated fourth quarter earnings. Bloomberg spoke with CEO Bill Winters earlier.
We've actually produced a great set of earnings in 2025. Q4 was strong in almost every regard. I mean, really all of the key elements of our strategy are firing on all cylinders. And while the share price has appreciated a lot, we think there's a lot further to go. So we're very happy to buy an additional $1.5 billion back. We also significantly increased our dividend in the fourth quarter, so for the full year of 2025. And that's a further sign of confidence in our ability to grow our earnings from here.
Now, the shares have been a little bit all over the place. You were at all-time highs earlier this year, but then, of course, earlier this month, your CFO left. And I'm curious, is that a sign that investors really want a succession plan in place? And sorry to ask you this, but, do you have one?
Of course we have one. We always have one. First of all, I don't think our shares have particularly reacted to the departure of any one person. It's a team. And you'll see, in fact, today when we announce our earnings, I'll be sitting with our interim CFO and our head of investor relations, who had been working for the CFO, who are absolutely outstanding. And so we're not missing a beat in that. But of course, the market now wants to know, you had several internal successors. One of them possibly seems to, he definitely left, possibly a successor, is gone. What's next? The good news is we've got a great bench inside our bank. I mean, it's the best management team that I've worked with in my 11 years at Standard Chartered. And I think it's a highly desirable job for people outside the bank as well. So should the board, of course it's a board decision, not mine, my job is to develop the internal candidates. I think they're in great shape, and I'm not worried at all about our future.
You've been there 11 years. How long do you want to run the bank for?
We've got a strategy day or a capital markets day coming up in May. I'm definitely going to deliver that, and I want to deliver the strategy, right? I want to see that strategy through. Now, how long that takes, we'll see. I work at the behest of the board, but for the time being, I think investors should be confident that, one, we've got great momentum in our business. We've got a really, really strong 2025 behind us. We've indicated we've had a strong start to 2026. Early days, but nevertheless, nice to be able to say. We're going to have, I think, a quite compelling investor day in May, and we're going to see it through from here.
That was my interview with Standard Chartered CEO Bill Winters earlier. And coming up, a look at what else is making headlines in your front page news today. This is Bloomberg. Time now for your front page news. First up, the Financial Times leading with its interview with President Volodymyr Zelensky as Russia's war on Ukraine enters its 5th year today. Zelensky tells the FT that without firm Western security guarantees, Moscow would use a ceasefire to rebuild its forces for another assault. Zelensky also urges the EU to stop prevaricating and fix a date for Ukraine's accession to the bloc. Zelensky says it should be as early as 2027. Next up, the Washington Post reporting the chairman of the Joint Chiefs of Staff says lack of munitions and support from allies could mean greater danger for U.S. troops in any major operation against Iran. The Post says General Dan Kane expressed his concern at a White House meeting with Trump and his top aides. And finally, we're going to take a look at the Washington Post and the Wall Street Journal, which is reporting China has banned the export of critical minerals and other goods with potential military uses to several major Japanese countries and companies. The Journal says the Chinese Commerce Ministry added 20 to an export control list. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. New levies kick in. President Trump's 10% global tariffs have taken effect in a push to protect his trade agenda. Bouncing back, futures rebound after stocks sold off on a Citrini report, stoking AI concerns. And President Trump gears up for the State of the Union address this evening. So let's take a look at futures now, perhaps taking their cue from Asia, but very definitely an improvement from yesterday where we saw the S&P down 1% at the close, the Nasdaq 100 down 1.2%, so maybe a tentative recovery. A foil perhaps to the AI doom overnight, those Asian chip makers winning out and the disintermediaries yesterday losing out, so banks, insurers and so on. We also, of course, have seen the tariffs kick in now. They're about 5.5 hours old at this point, a 10% tariff. Not as bad as the 15% that we might have expected. Let's take a look at treasuries because that 10-year yield continues to go lower, but very, very, very gradually. It's below 4.04 now. The 2-year yield at 3.45. The 2-cent spread is about 57 basis points and change. So it's actually a lot flatter than it had been. We have to point to IBM as well, though, saying its source is its mainframe value and not just its use for COBOL, that language, because of course that scared the markets as well. And IBM had its worst day since 2000. It was a phenomenal drop of 13% for IBM yesterday. So pretty amazing day in markets. We'll see what we should be looking out for today to give us a little bit of a steer and some stocks that are moving pre-market. Let's get to Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with the healthcare sector and Hims and Hers. This is a bit of a two-sided story. So we've got earnings on one hand, and they were disappointing. If we were to take the outlook for 2026 is disappointing when it comes to Hims and Hers, which is trading 6.6 down in the pre-market today. That is if the company does not go through with its copycat weight loss drugs that it was sued for by Novo just a couple of weeks ago now. What we also know that it's subject to yet another probe by the SEC, which has asked it to preserve some documents. So investors not looking favorably when it comes to that. The stock is retreating, 6.6. Novo not doing very well in Europe as well for other reasons, also related to its own weight loss drugs. Moving on to the AI story, and SanDisk is one of those stocks that is benefiting quite a bit. Vonnie, we mentioned it's up about 190% for the year. That is a massive jump for the year of 2026. And and that is on the back of this demand for data storage that has fueled a lot of recovery in this stock. And then finally, we move to Keysight, another AI story. On the back of earnings, the stock is jumping quite a bit this morning, up more than 17%, adding to those gains from earlier in the pre-trade session. And that is on the back of some of the work that this company is doing in the AI space, but also some favorable earnings news that investors are looking positively towards this morning. Vani, back to you.
All AI all the time these days. Abir, thank you so much. Abir Abu Omar there. And the team over at Goldman Sachs also keeping their eye on AI disruption concerns and market rotations. The team writing this: equity flows remain positive, but with weaker momentum. Rotation from US to non-US equities is evident. Joining us now is Sharon Bell, Senior European Equity Strategist at Goldman Sachs. I want to get to Europe in a moment. I do have to ask you first about the US session yesterday and yet another AI scare just pummeling markets. I mean, obviously the indices down only 1%, but you have the Financial Times now coining some of these stocks the Maleficent Five because they're just ruining everything for everybody.
Yeah, so it's amazing you say that, as you say, the market itself is not down very much. It's been incredibly flat in some ways this year, but it's all been going on below the surface. And what we see is that it's more capital-intensive companies that people are wanting, asset-heavy companies, companies like telecoms, utilities, that type of thing, rather than what we would consider asset-light companies that have done so well over the last 10, 15 years.
Would you trust this market? I mean, you said yourself in your writing that we are seeing weaker momentum and there's a lot of rotation going on. Would you let that rotation play out for a while and just watch the flows, watch what hedge funds, smart money is doing, watch what retail traders are doing, and then make your decision?
In terms of what we think for the overall market?
Yeah, I mean, if you had some money to put to work, some profit to put to work.
Yeah, look, we do actually think that the sort of volatility underneath the surface of the market isn't always a good sign. When you see this level of volatility in a relatively flat market, the sort of returns that you tend to get over the next year tend to be a little bit lower. So it's one of the signs of fragility, I guess you could say, in equities. That being said, not all signs are fragile out there. The economic data has generally been reasonably good. We are expecting the Fed to be cutting rates this year. So we've got interest rates coming down. We've got reasonably good economic data. A lot of sort of those types of macro risks, which perhaps at their peak a year ago, have faded slightly. So certainly not everything a negative, but I think the volatility below the surface and the extent of it and the persistence of it isn't a good sign. It's
interesting, you've also been watching the flows, obviously, and you say that hedge funds, for example, are still, you know, getting involved in the market, but leverage-wise, perhaps not upping their leverage. Yeah, and look, I think there's been quite a lot of heavy positioning in the market. And mutual funds, for example, in the US have got some of the lowest cash balances. We're not looking for a bear market, and you don't typically get a very sharp correction or a bear market unless the economic data severely weakens or unless you get a big inflation spike, and neither of those do we expect. So we do see this as a rotation with the below the surface between what people now regard as winners and losers in this new cycle. We ran a story yesterday about Strategist's projections for Europe and saying, look, last week's high might have been it. That might have been it for the year. What's the Goldman view? Yeah, look, the market in Europe has done super well so far this year. And it's done super well without a lot of earnings upgrades, actually. So valuation has got higher. If we were sitting here a year ago, I would have been easily able to say, look, Europe is on a huge discount to the US. It's a great opportunity, and I think it has been a great opportunity. I think there is still a very large argument for diversifying. You see how brutal it's been in the US recently. I do think Europe has more of the stuff that people are looking for now, bigger weights in things like heavy industries, utilities, telecoms, even banks, some of the financials that are relatively protected from AI. So I think, yes, there are attractions to diversifying away from concentrated positions in certain companies in the US, but the European market, having been very cheap, is no longer as cheap as it was. Yeah, exactly. And also, it's difficult to know what will go on with the euro, right? I mean, it's been strengthening versus the US dollar, but that'll make a difference as well. That will make a difference, I agree. I mean, one of the reasons it's been difficult for European earnings really to progress over the last year is that a lot of European companies have dollar exposure. Not just to the US, but globally, they have dollar exposure.
I mean, at least a quarter of their sales are to the US. 55% are outside of Europe. So if the euro is strengthening and you're translating everything back into European currencies, then yes, your earnings don't look as good, and that has been a big drag. It's one of the reasons we think, yes, European earnings can grow this year, but we're only looking for 5% on a kind of aggregate top-down basis. And a lot of the reasons for that relatively pedestrian earnings growth is because of the currency headwind.
And yet there's so much good news out of Europe, really, on the side. I mean, look at the financials. You know, Deutsche Bank, BNP, SocGen, Barclays, UBS. They deliver their best performance basically in a decade.
Yeah, look, I think Europe is advantage in this environment where people are shunning less capital-intensive stocks and going into more capital-intensive stocks and, as you point out, into financials as too, value companies. I would still argue in Europe, banks, which trade on an average PE of about 10, half the PE of the S&P, less than half, do still represent very good value.
OK, there's a recommendation there from Sharon. Sharon, talk to us a little bit about where else you would go. So if Europe, just broadly speaking, is nice and richly valued, and maybe you should take your profits there, are there other countries that we should look to?
Look, I do think there's a kind of argument for diversifying. And when I say diversifying, I mean out of just having US exposure, dollar exposure, very concentrated positions in 5 or 6 companies. They may do well, but you are extremely concentrated. That is a big risk, as we've seen for this last year. Europe is a potential place to diversify too, and there are opportunities there in things like defence, financials, etc. But also in emerging markets. Emerging markets economics is in many cases improved. Inflation in lots of cases has been coming down. Growth has been improving. They tend to do well, emerging markets, when the dollar is coming down too. So all of that provides a good hedge. And again, their valuations have moved up, but they're still at a big discount to the US. So again, another area to move to.
Anyone you'd avoid? I'm thinking China, India.
I don't know. I mean, India is always a more expensive market, but you've got very good growth there. China, on the other hand, is a much less expensive market. People are underpositioned in a lot of China exposure, so I think that is also a reasonable medium-term opportunity.
Sharon, thank you so much. We have to leave it there, but that is Sharon Bell of Goldman Sachs. Now, to other top stories trending on the terminal this morning. Jane Street Group was sued for alleged insider trading by the administrator winding up the affairs of Terraform Labs. The $40 billion collapse of Terraform in 2022 roiled crypto markets and contributed to the fall of FTX. A Jane Street spokesperson called the suit desperate and, quote, a transparent attempt to extract money. Paramount has submitted a higher offer to buy Warner Brothers. According to sources, the new unspecified bid improves on the $30 a share all-cash proposal Paramount presented to Warner Brothers shareholders on December 8th. If the Warner Brothers board deems the new offer superior to the current agreement, Netflix will have 4 days to respond. And Bitcoin extending its decline. It's on course now for its steepest monthly drop since the crypto industry saw a slew of corporate collapses back in 2022. Bitcoin currently hovering around $63,000. Coming up, President Trump's new 10% global tariff is in effect. More on what the administration is doing to protect its trade agenda next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in London. President Trump's new 10% global tariffs are now in force in order to try to preserve the president's agenda. And sources say the White House is working on a formal order to increase those tariffs to 15%. Joining us now is Mika Solner of Bloomberg Government. Mika, how likely is it that we'll see this increase to 15%? Would it be, more efficient to try and do some investigations and put whatever number he chooses on the different countries and industries?
Yeah, hi, Vonnie. I think this is going to be very likely. I mean, the president was very clear on Friday. He held a surprise press conference at the White House, and this is a very big issue to him. As we all know, the president has long awaited the Supreme Court decision. He's made it very clear that he is going to continue on with his tariff and trade policy agenda as he wants to see fit. And he did not think the decision was correct in his view. And he, has threatened to increase tariffs to 15%. Like we said, I know the administration exploring ways to make that happen.
The other thing that the administration did was it looked for promises, not legally binding, just promises, non-binding, from tech executives that they will cover their data center costs. Now, that's all very well and good, but if I'm a voter, am I really going to hear that message and believe that I'm not going to have to pay more for my electricity because X, Y, and Z are building data centers?
Yeah, and this is a tricky issue for the administration, especially as it kind of pushes forward with its affordability agenda, and cost of living issues remain a top concern for voters. So the president and the people closest to him in the White House are really trying to ensure that these tech data centers do not drive up electricity costs as they try and promote lower costs, and that the White House is bringing prices down. That's part of their key pivotal argument that not only the White House is going to make this campaign season, but also Democratic opponents. So this is going to be a big issue if this does impact him politically.
Yeah, absolutely, particularly with his affordability push in recent months. So looking ahead then to the State of the Union, so that's just a few hours from now, really. Is his team frantically rewriting some of that speech after the SCOTUS decision?
Well, I think the SCOTUS decision is definitely going to play a big part, but the speech will also come amid the Department of Homeland Security shutdown, which I'm sure the president will address Democrats in the room who are there about the ongoing shutdown, about that. I know that the president is going to make a big pitch on affordability, his agenda there, but we're going to see tariffs play a huge role, no doubt. And the only thing the president has previewed so far is that he expects it to be long because he has a lot to talk about.
Right. I can only imagine, Mika, and some of those judges will be right in front of him, the ones that attend. Mika Solner of Bloomberg Government, thank you. Kaylee Lyons and Joe Matthew, by the way, will anchor special State of the Union coverage live from Washington, D.C. Now, that starts at 8 p.m. Eastern Time. They'll bring you full coverage and analysis of President Trump's remarks, plus the response from Democrats. JPMorgan CEO Jamie Dimon says he's starting to see parallels to the time before the 2008 financial crisis. This is what he said about fierce competition in the financial industry and the rush to make loans at the bank's company update session on Monday.
Unfortunately, we did see this in 05, in 06, in 07, almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
Joining us now is Bloomberg's Tom Metcalf. Tom, Jamie Dimon is usually in the position of trying to calm things down, right? But at the same time, he always manages to create these ruffles in markets. He did so with the cockroach comment and now this. What else did he say at this meeting?
Yeah, no, it's exactly right. He always generates great copy, right? And what he says is so closely watched, even when it's quite nuanced, as I think he was at that investor meeting. It does ripple on through markets, and certainly people, really peering through what he's been saying. So, his big points were that there are signs in some areas for only, a handful of places that maybe, there's a bit of over-exuberance, maybe there is some kind of, pain coming, whether it's in loan losses. He was talking just then about net interest income and how he's seeing a couple of firms, I think is what he said, doing funny things to try and boost that. But yeah, broadly speaking, in terms of the areas he was looking at, he was saying, might AI kind of create more kind of disruption, as I'm sure it will, going forward. And broadly speaking, echoing those previous comments he's made where, there are problems there in some areas. A lot of people taking this as maybe another ding at private credit, but I think it was maybe even broader than that, looking at the banks, other rivals. But as ever, whenever he speaks, people for good reason tend to listen and try and unpick it, whether they agree with him or not.
Well, he has been around for previous massive sell-offs, hasn't he? Now, there are mounting warnings as well, with another coming yesterday from Arini Capital's founder, Hamza Lemssouguer. He told Bloomberg, quote, "The immediate issue that we see is the increasing cost of capital for a lot of these companies, which will eventually lead to significant defaults, disruption and dislocation in credit markets." Significant defaults. I think also the figure of 10% unemployment was in there. I mean, where are they drawing these conclusions from?
Yeah, I mean, he was talking specifically about software companies, right? But, you know, I mean, Arini, big player in this space, 17 billion or so. I mean, I think a few things to flag. One is they're not massively exposed to software companies, the companies that Hamza's talking about. But, of course, you know, you'd expect them to have a pretty good perch. And, you know, frankly, we've been seeing this in the markets, right? And one other thing there is really... you know, he was saying this is maybe even healthy, right? You need to go through these cycles. You need this kind of rigor. You need, you know, people to sort of benefit from, you know, the risks, you know, perhaps undue risks people have taken just to kind of balance out the market. So definitely another kind of warning signal, but again, a nuanced one. And I think very specific in Arini's case in relation to the software space.
Tom, thank you so much for your context. As always, that is Bloomberg's Tom Metcalf. Futures bouncing then after stocks closed down more than 1% in the last session after a report from Citrini Research outlining hypothetical AI-driven structural shifts which stoked fresh AI woes. Bloomberg spoke to the co-author of the report, Lotus CIO Alap Shah, on the market reaction.
It's not that surprising when you take a step back and consider kind of where the markets are in the U.S. You know, the AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, you know, spooks people when you do consider what is negative about this. But I think specifically the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, who is max long, given that we're getting these warnings now day after day after day?
Yeah, I think maybe we're not quite as max long as we were is the answer to that question. I mean, obviously, this report talking about this scenario where maybe as much as 5% of white-collar jobs are lost in the next 18 months. So that'd be quite a rapid shift in employment levels. You know, we hear this a lot, and obviously the likes of Anthropic with Claude and the various new kind of features they add is really highlighting that fact that there was made just there that, you know, the capabilities of AI are really accelerating, and that's starting to kind of force people to kind of look at, you know, this real disruptive potential, and happening perhaps quicker than was previously expected.
Are you anticipating any bankruptcy announcements anytime soon?
Not anytime soon, like directly related to this issue, if I'm honest.
Yeah.
I think, you know, it's something that every company's having to grapple with, but I think there is still maybe a little bit of a disconnect between these scenarios and what's actually playing out in the real world. Hypothetically, it could happen, but I think in terms of a timing issue and whether actually companies choose that path or choose an alternative path is up for debate. Obviously, employment law protection in the US is pretty limited, very different picture in, say, the UK or Europe. And I think governments and policymakers are perhaps going to be a bit more thoughtful about that, and the unions will probably get involved too. So maybe that would act as a bit of a break, at least in some sectors.
That is an excellent point. We hadn't even made it there yet. Matt, thank you so much. We have to leave it there. That is Matt Bloxham of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day earnings and the State of the Union address on deck. This is Bloomberg. Now look at what's ahead today. We have earnings continuing with Home Depot and Keurig reporting before the bell. Plus ADP employment numbers at 8:15 Eastern. And the Conference Board consumer confidence data, that comes out at 10 a.m. And of course, President Trump gives his State of the Union speech at 9 p.m. Eastern. Kayleigh Lyons and Joe Matthew will anchor special State of the Union coverage live from Washington, D.C. That programming starts at 8 p.m. Eastern. Couple of before the bell movers now. We'll start with Hims and Hers, dropping on fears over the copycat drugs, mired in legal risks. There's a lot of uncertainty out there about the company's ability to sell those copycat drugs. Blue Owl down 4%. It's been cut to hold at Deutsche Bank. The price target there now exactly at $10 where it's trading this minute. And Keysight Technologies, well, it's soaring. Its outlook was raised on AI demand of almost 20%. Here's your macro picture for your trading day ahead. That's it for Bloomberg Brief.